Hi everybody, Russell Markham here from VectorVest. If you want to find out more about our financial services license, please check out our website where we will tell you further details. In addition, please note, I'm not licensed to give personal advice, only general advice. Please speak to your financial advisor for personal advice. Past performance not a guarantee of future results. Forecasts, backtests used or discussed in this presentation are intended as guide only, and actual results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. So jumping into VectorVest, let's find out some of the best performing industries right now. So if you're new to VectorVest, this is really quick and easy to do. For our existing subscribers, make sure you are checking in on this technique because it's just so simple, it's so powerful to do. So if you click on viewers, and within viewers here, you want to go to industry viewer. All right, so when you first click on viewers, you'll be greeted with this layout here. And then all you need to do is just simply click on industry. All right, so here we go. Here are all those top listed industries as of 12 July. Look at that, ETF short. So they've got the best short-term price momentum, relative timing. So what we do there each and every day in VectorVest is we sort all those industries that are moving the quickest. You can see right up the top list, ETF short. And if I go, let's do this. We say all, we'll list all industries here. If I go right down to the bottom of the list here, look at that, materials, lithium. So it's really come off. It was running pretty hot at one stage. It's a bit surprising in the current market that gold overall is not doing better. It's a defensive asset. But remember, as we've noted in previous weekly essays and videos, that all that glitters is not gold. You need to be careful with a lot of the gold stocks there. A lot of them have not necessarily got sound fundamentals, let alone technicals. Just because the gold price is surging doesn't mean that a given gold company will be surging. A lot of those gold companies are not even producing gold, let alone got finance to start working on their mind to start producing gold. So one just needs to be careful and pick those gold stocks carefully. So here's a great trick to find out the given stocks in an industry. So ETF short, right click, view stocks in industry group, and then VectorVest will load it up for you. And here are those 4 contra ETFs. If I quick test all, I'm going to go back to the start of January just to show you. So since the start of January, let's bring it back on a quick test. So quick test is simply looking at point-to-point movement taking place. So there we are, first tradable day, 4th of January through to the 12th of July. As of my current time there of recording, look at that, 35% returns, very nice indeed. Here's another little trick. Let's do this. Let's quick folio all. So it's a great technique here. So quick folio all. So we'll give this name here, Contras, and I'll assume we invest 100,000. Just to show you, had you put 100,000 into Contras at the start of the year, so we're going back to, where was that? Are we going all the way back to the start there? No, we're not. Let's just make sure we go back in time, so just be careful on that. Make sure you want to go back to when you want to start, right? So if I want to start there on the 4th of January, bring it back to the 4th of January, then quick folio all, and then away you go. Give it the name you want. Contras, I'll call it. Let's pretend we put $100,000 in and you buy them long. So contra ETFs are designed to go up as the market goes down. You buy them long just like you do an ASX listed stock. They're listed on the ASX. So I'll push an OK. Let's open the portfolio now. So here we go. I'll just close out of here, and here are those contras. Right, so you can see, look at the journey being very interesting. Came off a bit in March leading into April, and then it rocketed back up, and there you are. There's that 35% return since the start of January. So you can see those returns have been very impressive. And look at that, 71% for SNAS. All right, so here we are, coming back to our industry view here. So just, you can see the power in that industry view. It's identifying some of those quickest moving industries. What we've just gone and done is had a look at some of the recent performance. All right, the next one here, ETFs, bonds. Now, a few of you might be saying, well, hang on, bonds haven't done too well. Just on that, let me just show you something. So there's a recent article here on the 7th of July in the Washington Post, how inflation fears drove a historic global bond rout. Anyhow, it goes on to note that bonds have had a pretty tumultuous time due to inflation. All right, and then also went on to list that, bonds have had one of the most difficult years ever, going back quite some time. So it notes over here, by one estimate, 2022 looks like the worst year for US bonds since 1842, when the nation was mired in an economic and financial crisis. Now, this is what the media is noting, and certainly, yes, bonds have fallen away heavily, but what's interesting here at the moment is that we're seeing that the ETF bonds as listed on the ASX here in Australia, we're starting to see them just showing a little bit of a turnaround. So if I graph the selected one here, this is going to graph the average of all the bond ETFs. Look what's happening here. We're seeing just a little bit of a tick up in price starting to take place here. All right, so let's explore a bit further. Let's right click. Let's view stocks and industry group. Now these are ETFs. All right, so all of these here being ETFs. And you can see there are a total of 25 bonds, all right, or ETF bonds, all right, being tracked by VectorVest. For quick test all, let's do this. Let's go back since the start of July. So I've clicked on quick test, 1 July through to the 12th. I'll run that test. Look at that. A total there of 22 winners, only 3 losers. And the top performer, IHHY, followed by RGB, followed by AGVT. Very telling indeed. The ones that didn't get a positive return, well, look at that. That's negative 0.04, negative 0.16. All right, this one was the bigger loser here, negative 4.61. But apart from that one there, look at that. Everything else there is pretty good. Interesting, is this sustainable? I can't tell you, but we're seeing VectorVest is picking up. It's telling you things are just starting to change, just starting to turn around. Let's do this. Instead of going 1 July, let's bring it in just a wee bit closer. So let's go, let's say the 7th of July through till the 12th. This will be interesting. Run the test. And again, what's taking place here? So the last couple of days here, so 17 winners, 7 losers. Still a very good rate taking place there. So you can experiment and play around with this. So we are just starting to see that turnaround in government bonds. So despite inflation, what's interesting at the moment is that we're seeing bonds listed on the ASX, ETF bonds listed on the ASX are starting to pick up for whatever reason. All right. And if I view all those ETFs again, and let's do this, we quick test all again. Let's just go back just a tad bit more here, just for a bit more fun. Let's go back to the start of June now. How about that? And we'll run that through until the 12th of July. So a different story here, right? You can see here a lot more losing short-term players here. So only 6 winners were starting to take place, or at least were taking place. So you can see there's a turnaround. Since July, there's been a real turnaround. So it's gone from negative territory. That ties back to that article we just noted there, but things are changing. Something's just changing here. So here's the top performer, IHHY, and I thought it'd be interesting just to have a look at this. Right click, and let's view full stock analysis report. So I'll bring up the report here, and you can then drill in and read further. So iShares Global High Yield Bond Australian Dollar Hedged ETF is an exchange traded fund incorporated in Australia that aims to provide investors with the performance of an index before fees and expenses, composed of liquid, global developed, high yield corporate bonds hedged to Australian dollars. All right, so interesting. That's your top performer, at least in the short term since July, 1 July through to 12 July 2022. All right, so let's close out here. Next one here, financials insurance. Let's right click. Let's view stocks in industry group. All right, so here you are. So you've got a total of 11. And again, let's quick test all. And let's go back to the start of July to see what's going on. All right, so 1 July through to 12 July, I'll run the test and click on the best performers. And look at this, interesting. AMP, they've had a very difficult time, but just starting to turn the corner, are they? NHF, AUB, so some very big performers there over the last couple of days. Remember, this is just a few days worth, so substantial returns there. AMP in NHF, for example, you're not going to get that on a 1-year term deposit just yet, are you? Well, you'd be quite hard pressed. And they've done that just in a couple of days. So interesting just to see what's taking place. Not all of them are surging away. You've got these laggards down here, but very interesting to see what's taking place up the top here. Let me show you another interesting article. So here's an article here by Live Wire Markets, and Mel Whitten here wrote a very interesting article. Why are insurance stocks undervalued? Anyhow, he goes on to write on about why the insurance companies are undervalued. They're receiving premiums right now, and they've got the opportunity cost of reinvesting those premiums, because they don't just simply take premiums, they work the money, and the idea being that the returns that they get on your premiums are more than going to offset any losses in terms of payouts that they've got to pay out. And he goes on to note some very interesting statistics here over financial periods in time versus the losses that insurance companies have had to pay out for certain natural disasters and the likes. Very interesting bit of analysis. You should read it if you get the chance. Anyhow, the theme of the article is insurance companies being undervalued. So let's come in and have a look at VectorVest here. Let's look at our price versus our value. I'll just bring this over here. Just simply left clicked, held, moved, and then dropped, and I can put the two next to each other. So you can see here NOL nicely undervalued, QBE compared to VectorVest's valuations 1171 versus 1663, 441 versus 451. Sort of fairly valued. So here a little bit overvalued there, but this one here nicely undervalued as well. Prime Financial 17 cents versus VectorVest's valuation of 27 cents. So again, this is tying back to what the market's saying. There are some nice undervalued insurance companies. Have they been unfairly oversold? Have investors panicked because of what has happened in recent times with the floods and the fires and all that's taken place with insurance companies? Have they been unfairly oversold? You be the judge, but look at that. VectorVest is bringing that right up there for you, and it's tying right back to what we're reading at the moment. So you don't have to guess, you don't have to waste your time going through and digging out all the different articles out there. VectorVest brings us straight to your fingertips each and every day. And the last one here, let's have a look at this one here, ETFs International. Right click, view stocks and industry group. Here they all are. All right, so these are the ETFs, and let's do this again. Let's quick test all, and let's go back to the start of July. It's been interesting. So here, 1 July through to 12 July, let's run the test, and look at that. If I sort here, wow, Cure.ax, a pharmaceutical company, should I say ETF, LNAS, MGF, HACK. Wow, look at these returns. These are just in a couple of days here. Substantial returns. So 47 winners, 17 losers out of the 68. So something is happening there with the international ETFs, really powering away. Of course, not all of them are winners. So you can see the ones down at the bottom of the list here that are not going as well. But look at that. Certainly the top end of town there doing pretty well indeed. So you might want to explore some of these international ETFs, right? So you can right click on this one, for example, view stock analysis report for Cure, and so you can see it's a ETF's S&P Biotech ETF. Very interesting in the medical world. My understanding is that no medical company is allowed to say that they've got a cure for anything. They've got to say that they alleviate the symptoms or certainly assist with the well-being. That's my understanding. So I've often joked in the Q&A session saying it's actually quite a clever play on words, because they're able to get away with the word cure in an ETF. So good on them. I think it's quite a clever name. All right, so I'll close that out of there. There we are. Do this each and every day. Before I let you go, I couldn't help myself. Let's have a look at the US. I'm not going to go through the ETFs or the stocks, but you've got access. If you want to find out more about VectorVest, take it a trial. You've got access to all the countries that we provide the analysis with there. One of them being the US. Do the same exercise each and every day. Go into viewers and go to industry viewer, and now in the US, look at that, you've got ETF short, You've got ETFs sector biotech, you've got food, machinery. These are some of the top performers right now. So if you are concerned that you didn't have enough ETFs, shorting ETFs for Australia, all right, I said I wouldn't show you all these here, but let's just show you the number. Look at that, 92 contra ETFs for America. All right, so you've got plenty of choice there for the US as well. Hope you got a lot out of it. Until next week, bye for now.